I think that the CBN is learning from what happened in the consolidation of 2005 when after banks raised capital, they had enough capital, but now how investors will need to see what's the best way to make that capital more efficient.
Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be looking at Central Bank of Nigeria's latest regulatory provision for financial holding companies, the payment industry, and the pathway for financial system stability. My guest for this conversation is Dr. Ebo Ayodeji, a financial analyst. It's great to have you on the conversation.
Yeah, good morning, and it's great to be here.
Thank you for joining us in the studio.
Yeah, thank you for having me.
As you know, the Central Bank of Nigeria recently brought out this draft exposure for reviewing the guidelines for regulating the financial holding companies, which is very critical at this time. And ProShare made his intervention recently. And one catchy phrase I took from there was that the net effect is to reward transparent structures and penalize opacity. Well, let's get your first statement and inputs on this revised guidelines that is the draft exposure at the moment.
The simple way I will put it is more of moving from the capital availability and consolidation that we're seeing to more productivity and governance. So I think that the CBN is learning from what happened in the consolidation of 2005 when after banks raised capital, they had enough capital, but now how investors will need to see what's the best way to make that capital more efficient in terms of the return on equity will be an attention to then also on the governance structure, because the governance structure is also key so that there's no contagion impact or risk across the bank. So I think it's the next phase, which is a welcome development.
Yes, the issue of the contagion. Look at what happened in 2005, 2007 effects. Trying to ensure that we have that stability is very critical. Very nice. And then again, the ProShare recent intervention said it is showing that we are seeing a shift from capital adequacy to capital productivity and group governance, which is, according to our intervention, very critical at this time. What is your take on that? Because it's not just to have capital adequacy, but having that capital productivity and group governance.
Yes, so it's really very valid because, investors have entrusted capital. All the banks were more than successful in raising this capital. So now, how do they begin to deploy and make good returns to the investors? So I think that, for what the CBN is saying that, okay, on this holding structure may not be the best efficient way. So if the banks are holding, have raised the capital, there's the holding structure and the banks have raised the capital, and the banks are also now exposed to two more risks by holding different assets. So why can't we have a structure where, yes, if you decide you want to be a holding company, let that holding company be the one holding the different assets. So if the insurance business is having a problem, then it will not affect the bank. If your foreign bank is having a problem, it will not affect Nigerian banks. So I think that governance is something that I think is critical. And when we also look at it, to provide transparency, like you look at a lot of shared costs. So now each of the companies is like they are standing alone. Why there will be an increase in terms of compliance? Because having your home board, reducing reliance in all those shared, let's say, control, compliance that you use. Now you need to spend more money for compliance. But I think in the long run, it's also going to give depositors, investors, rest of mind. And for banks that we should watch out for are banks that able to quickly translate into, look at this structure and translate it. And those that don't have a lot of hidden costs that we're unable to see before will actually be able to return significantly to investors.
Yes, and even going further to the ProShare insights on these latest guidelines from the Central Bank of Nigeria, it states that it rests on enforcement, ensuring that enforcement is done, clear timelines in terms of how you're going to make sure that the holding companies convert their strong balance sheets, because strong balance sheets is very important, to productive intermediation rather than internal complexity. And I know that for over a decade, you've been involved in robust bank reports in terms of how banks have performed and issues around governance and performance and returns. What is your take on this also level of expectation that there will be more enforcements where required, and that the financial holding companies will be held account to ensure that they convert their strong balance sheets into a better level of intermediation that creates value for stakeholders and shareholders?
Okay, yeah, very interesting. So for me, I would say also from the side of the CBN is that the timeline should also be a bit realistic, because if you are going to almost enforce immediately, restructuring the company, changing structures also take time. If you are going to also hire a new head of compliance for one subsidiary today, sometimes it takes 6 months. So maybe there can be effectiveness or has been enforced, but they also have to be realistic to see that some things cannot be immediately enforced. You want to get a new board, it's not going to work overnight, except if before this they have been informing the banks and we are not aware. But if we are going to it's going to be effective by July, then I think that's too close. And secondly, there will be need to follow through on those enforcement, because for investors, for instance, we be paying attention to the structure. So banks that will benefit is those that are able to communicate clearly in terms of provide guidelines on, so this is where we are, this is where we are going, and they are providing the updates. So those are the banks. So we'll see that some investors are, even as yesterday, are reacting to some banks they suppose may benefit from this holding structure, are already enjoying that rally. And for some banks, there's no clarity now, given how their holding structure is. So those are some of the things. So banks will now need to, once it's in enforcement or it's effective, then banks will need to begin to provide clear guidelines. Because for investors, return on equity, so we've seen it over the years that I've been covering banks, return on equity is one major variable that investors use to price banks. Return on equity, return on assets. So banks that have enjoyed higher premium based on price to book are banks that have delivered impressive return on equity to investors, because it's also based on that you'll be able to pay dividend to investors.
And the banks are also the critical players also in the whole financial holding company structure. But let's look at market confidence, because everything also drives from confidence of investors, of stakeholders, of shareholders. Does this post-recapitalization of the banking sector and with these new guidelines for the financial holding companies, what is critical to drive market confidence, even as stakeholders will make their inputs to this draft guideline before the timeline in July that the central bank will begin to look at actions to be taken?
So I think the first thing that we also have to give it to the CBN is at least first releasing it as an exposure draft. So even for some of us that are not bankers, we're already trying to digest and understand, and there are already discussions around it. So it also helps the CBN to see different perspectives on things that you should take on board. And I feel even the banks right now, the legal guys, most people will be coming together to send in their views on this exposure draft. Or I also want to emphasize on the timeline to make this effective. So I feel that maybe 3 to 6 months may be fair enough to allow banks to be able to effectively implement this. Secondly, for the investors, now they will be paying attention to dividend payments. This issue of capital affected some banks that they've not been able to pay dividend. So now with this structure, people want to also understand, because now dividend payment will be tied to have capital adequacy from the holding company. So if you are doing a lot of more businesses going into different countries, do you have enough capital to absorb that risk? And if you don't have enough, it means you can't pay dividend. So these are some of the questions that we are also getting from investors that they want to know, which would also reflect on the activities that you see on some of the banks also in the market. So I think that clarity would also boost investors' confidence. Banks have to communicate. So even if it's going to take you 1 year to get there, once it's clear, when people know, investors also buy the future that, yes, this bank may not be able to pay dividend or may not be able to restructure now, but believe that 12 months that you are giving us, that 9 months that you are giving to us, once they keep to that, then investors will buy ahead and be happy to wait and enjoy 50%, 100% return in 1 year if they are sure of the direction. So those are the things that can boost confidence. And CBN should also further, this is an exposure draft, picking on some of the areas that they may need to expand on and provide more guidelines. Also coming up with, they know now, policies beyond just affecting the banks. Some of these policies also shape the way investors view the banks. So the frequently asked questions that they always do on some policies should also come, so that some banks are not necessarily punished because there's no clarity. So that's also very important, that CBN knows that beyond focus on the banks, providing more clarity to the investors, the street, is also very key.
Yeah, because it's not just the banks. Financial holding companies cover other financial services activities. So it's very critical that market confidence is strengthened through stakeholder inputs and the whole ecosystem working together. So we'll continue to track this, but really, really rich insights from you. Let's move on to the payment industry. We also saw that the Central Bank of Nigeria provided oversight to the payment industry. Digital payment industry is very critical. What it's doing, financial inclusion, expanding financial activities across the country. How would this transform the landscape in terms of enhancing governance, which has been recurring issues raised for that industry to be sustainable? And how does this link to achieving ecosystem sustainability for the payment industry?
Okay, if I would touch on that, because if I'll call it a contrarian view, the CBN is talking about localization of data.
Data, yeah.
Right? And I feel that...
localization of data and also ownership.
And ownership.
Which is taking effect from January 2027.
Yes, within the ownership within the country. So I feel that the cloud-based, so I'm trying to see the cloud-based method, which has been efficient, because I recall those days of server days that in the banks that you have server on the premise, to now the cloud-based method. So I feel that there's a need to be sure that the step that we're putting in place because of cybersecurity in localizing some of these things. We know what on the likes of AWS, why Cloudflare, all those things came on board, what they still go through today, so that we are not exposing ourselves. So I would say this should not be rushed in terms of localization and ownership, because that space of fintech is very sensitive. For some of us, we have experienced or seen in the industry how this how this arc happens. And there's a need not to rush some things when you're building technology. So now to move the data to a Nigerian-based company to own it, being within the country. The policy also there has to be strict policies for some of these service providers. And they must also have some shared responsibility that if anything also happens, they are also penalized. So they have to select the vendors. They have to vet them so that it's being regulated before it's open to more people, but there has to be an enclosed, well-tested environment using the cloud, because I can tell you it's a lot of the hackers would want to test this platform to be shared, and or they can even hold those firms to ransom if they are able to have access to the data, which is also, data protection is also very key. So while this is a very good policy, in summary, what I'll say is that it should not be rushed. It's a very sensitive area because of the introduction of cybersecurity, and AI is also helping even the hackers or the scammers to grow wider. So that has to be taken into consideration.
And in 1 minute, your outlook, second half of the year for the financial services sector. What do you see happening?
So I think that it will, on the back of capital that has been raised, I feel that and expected yield in the fixed income remain high. I think that it's still very positive, and while we may not see as much loan disbursement in the second quarter, given that we're approaching the election year, we still think that based on interest income, the banks will still deliver very impressive return. But maybe on a year-on-year basis, maybe average of maybe 10%, and some, because of some non-recurring income last year, we may see a decline in their year-on-year growth.
Thank you very much, Dr. Ebo Ayodeji, financial analyst, for this interesting conversation looking at the Central Bank of Nigeria's latest regulatory provisions for the financial holding companies and, of course, the payment industry and the pathway for financial system stability. It was great having this conversation with you, because the financial holding companies and the payment industries are the big drivers of the financial service sector, and FSS is very key for any economy. Thank you once again for the time.
Always my pleasure. Thanks for having me.
So our viewers, that will be all for this conversation. If you want to get further insights on this, follow our website displayed on the screen, and also our social media platforms. To come your way again, I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.